Good day, traders. Stacey Burke from Stacey Burke Trading, and continuing our discussion on trading the weekly template. Yesterday, I didn't quite go into depth on the daily charts. Everything for me starts at the daily charts, and specifically, the most important areas for me are at the end or the beginning of the month, the high and the low of the previous month. The same principles apply for me. I look for three types of situations, and this applies to each trading session each day. There's only three things that markets do. They will trend, they will break out, pull back, and continue with the trend. They could be in a trading range, trading sideways, where we just either have a breakout reversal from high to low, low to high, or we're just merely trading from high to low, low to high in a sideways price action trading range. And the third, of course, is false break reversal, marginal new high, marginal new low. As Colin Nicholson says, there's no such thing as a false break. If it makes a new high, it's a new high. But false break reversal trade setups or beginning of the month for trend reversals, session high or lows or daily highs or lows, those are opportunities that can trade back entirely to the other side of a range, possibly high to low of a day, high to low of a month, high to low of a week. And in some cases, if we're in a strong, for example, we'll look at gold, we're in a strong bullish market, we have a marginal new high on Friday. We've had one this morning at the beginning of the week, and market drops down 75 pips right off the bat. So on the daily charts, these are key timing windows. So we get towards the end of the month, the beginning of the month. These are critical times when the market may be setting up for one of these three types of scenarios, and that may be already evident in the price action that has traded in that month. And so it's important for me, again, heading into that, because we can have opportunities that could be the beginning of a large move for an entire month. So again, not necessarily that I'm going to be in that, but having the bias each session or even at the beginning of sessions for the larger range trading days, ones that can move a lot further than ones that are caught maybe in a sideways trading range, a choppy market, 25 to 50 pips. We're talking about maybe 200 to 300 or more pip moves, especially on some of the more volatile instruments. So we can look at any pair, and again, I just have a simple process. People can use indicators. They can talk about commitments to traders reports. They can look at all kinds of data. I'm talking about whatever instrument I'm going to trade is narrowing it down to the highest probability setups. The longer you trade, the more and more hopefully you'll get sick and tired of chasing garbage markets, garbage trade setups, hoping to scalp in and out and get lucky, and start really focusing on high probability opportunities of where you have a distinct edge presenting in the market, and then identifying which of those trade setups are ones that can actually offer you large risk reward profit opportunities. So instead of each day being highly stressed, going to the market hoping to get lucky, you start to really step back and look for things to set up where you've got an opportunity, at least not to be on a losing side, and how big the profitability on that trade is. Again, high to low, low to high can offer bigger rewards. So even just looking on the daily, at the end of the month, the beginning of the month, it doesn't take rocket science. People can step back. We can look at stuff and say, oh yeah, but you can use trend trades and EMAs and all that. But I stick with the really basic process: high and low trend lines, just simple stuff. Because when we factor in the timing, and we're not, again, so this is without putting the Monday to Friday cycle on there, which we talked about in the last video. But when you narrow this down and then you incorporate in the Monday to Friday template, you can start to identify opportunities of where reversals may be occurring, of where you may be able to position yourself near the high of a month or the low of a month for a long trade, or when a market is possibly poised for a breakout pullback and a continuation or a measured move. Again, just, people talk about hindsight, but see, here's the thing. There's going to be the beginning and the ending of a month. There's going to be a high and a low. The market's either going to make a false break reversal or be stuck in a trading range. We see for the month of December, the euro was stuck primarily in a trading range. They locked in a low at the end of the month. No high or low was broken. So there might have been a lot of great opportunities on some of these large range days. But then we get a breakout in January and an engulfment. This is on a daily chart. So for a large move back down to the low of the year. High of the year, low of the year. We didn't even mention that. But again, specifically just targeting high and low opportunities and then having an underlying bias. If you weren't maybe selling up top, once the high is locked in, you may have had a bias back inside of this trading range that we were possibly going to revisit at least the low inside or an area inside. Then the market continued to retest all the way to the other side. We may have a low locked in on the euro now. We may have locked in a low of the year, January, February. Again, same initial balance. First 2 months of the year can give us some important insight into the direct. Any two trading sessions can give us some important insight into the strength or weakness of an underlying market heading into that third or fourth day. So when I talk about identifying an underlying bias, we could take a look at gold, for example. Again, coming into the beginning and the ends of a month, we have markets. I talk about working from the high and the low. Everything else is inside. So again, there are probably a lot of inter-session or inter-day opportunities. But also then I start to, when the timing window kicks in for the new month, I want to know, have we worked down into a low? Have we hit stops? Have we triggered breakouts? So again, people may have been shorting this at the low of the week, the low of the month, the low of the day. They may be stuck down here holding on to something for the rest of the month, which is where traders will end up blowing out their trading accounts. The market proceeds to auction higher at the end of the month, so we haven't taken out the previous month's high, but we have taken out the high of the current month. We're making new highs. The market opens up. We have swing lows inside, and again, we see an opportunity possibly with the weekly cycle of where this market may be reversing. I don't know. A comment again was made about predicting and all those sorts of things. I don't do anything until I know that the market shows its hand, and that goes for the day itself as well. Once Asia, there will be days when I need to let Asia trade. It's inside of the high and low. Maybe it's inside of a previous day's high, and they're going down not only to eat into profits, but to put a low of the day in place as a reference for me now to have going into the next couple of sessions. But the daily bias is where I pay particular attention to the timing window, the end and the beginning of the month, and the halfway point. You'll notice that this pin hammer stop hunt to the low occurred at the midpoint of the month. Now there's roughly 20 trading days in each month, so that's going to occur anywhere from 8 to 12 days into the month. Sometimes we'll get a first week consolidation reversal, flipping the book. Second week breakout pullback into the reversal direction. Third week trends back up near the high. The fourth week closes back inside. But again, that may give us an underlying bias. Again, you'll notice 1, 2, 3 for the explosion back up to the high. If you pay attention to the daily charts, there's a couple of other things that I look at. And again, you'll see this on the, if you're using 15-minute charts, 1-minute charts, wherever a breakout level has been on a daily chart, often that gap will get filled or retested to some degree to eat into traders that are in profit to fill the gap. We see a breakout gap currently on gold at the high, not only from the month of November, but we can bring this back. We have existing highs still up just where they've broken through this morning and just above the May-June transition and the high of last year. So this market currently, although it had a great short trade setup this morning, is still obviously fairly bullish. We have another week or so left in this month. Important, we have a micro trend line obviously driving this up, no trend line break, as opposed to maybe a consolidated sideways market that was down at the low of the previous month, giving us our micro W, which again seemed to form a base of support heading into the current February month. So again, the daily charts can help you identify a lot of bias or areas for trading high-low. And then also, if you're looking for situations where the market may be having breakouts or trap traders. So looking at your wicks, you can see where traders are caught selling high, buying high, and they're caught. And that may give you some bias in a session that the market already has trap traders, and this may be moving in a certain direction based on that intraday setup. We can look at any instrument, any pair. Aussie dollar, we had a low of December in place. They came down right at the end of January and hit the low, triggering breakouts, hitting stops, and then engulfed right at the end of the month. That market came back inside and has gone 3 pushes inside and is still moving higher. And we have the previous month's high. We have a high of the current month as we head towards the last couple weeks of February. But this would be probably more of a narrow range, trading range type of setup, more bullish to the upside. But we could be seeing traders getting caught now buying up high with this swing high. And again, this type of market would be probably low probability. This type of market going down, I may have an underlying bias in a session looking for, as we talked about yesterday in the weekly template, maybe a 1, 2, 3 blow-off move in a London or a U.S. session. Aussie dollar may have even offered an opportunity in the Asian session. Obviously, in a market that's heading down this strongly in the last week, I wouldn't be going long. I'd be looking for the short trade in one of those sessions. And again, these are the setups where when the market is coiled to blow off, I'd be prepared to put more size on, because those are the ones that are the path of least resistance, and when they go, they're not coming back. So looking just at the pound yen, we have a high from back in October. The market has traded up there the last couple months and turned lower up near this 157.70 level. It's hit it twice now and come down. At the end of the month, heading into January, we saw the market trade up to that level on top of December before trading sideways with 3 pushes and then engulfing and then dropping down. So this particular type of setup, if you were trading the pound yen, would have gave you some insight to be looking for short trades in that blow-off move. Now, I haven't gone a lot into detail, but even high-low, I look for 50% levels from where the move started. The move started down low for the explosive move back up, came back down 50% before consolidating, engulfing, and then trading into the beginning of the new month. These are just subtle little things that can give me some insight if I'm looking to trade something. I'll take a look at the daily chart. I want to know, is there gaps? And there's an example of a breakout gap that they came back and pinned up into. And in a situation like this, I'll draw 2 lines and want to know what's the number level halfway. Because that, we look at this, we're looking somewhere 154.69, so roughly 75. The high of this bar was 73.8. The timing of that pin high may have been in one of the major sessions, but that may have been a nice short trade at the beginning of a session, at the high of the day, the high of the week, on a pullback retesting that gap. When we see our consolidation go sideways, again, there's a box. That's a box. This may offer an opportunity for a measured move. So keeping it simple, one full expansion that ends at the end of the month and the beginning of the month, they coil it sideways. This level now potentially is becoming support at the low of the month. The low of the month and the beginning of the new month goes sideways, breakout, pullback. This breakout inside is your dead giveaway. They've snowplowed up through the lower highs, pulled back, and there's our W at the beginning of the month for an explosive move back up. So again, this W formation, if you were looking for that explosive move, you're looking to be trading long in your session. So looking for the long session setups. Does it mean you might not get a great short setup? Possibly, but the real trade opportunities will come in the long direction in this particular situation. We can take a look at the Nasdaq. So we had a low back in October. We had a high up in November. The market traded back up there at the end of November. They put in a higher low. Heading into the beginning of January, we had a higher low W up top. They took out the high of December. Lower highs were hit. We had an engulfment right at the high at the beginning of January, and that market proceeded to begin its move down. They talking again, 3 things that markets do: breakout, pullback, continuation down. This monthly cycle, some traders would have been looking to go long 1, 2, 3. They've taken out this lower block of price action before reversing. And again, just talking about the Monday to Friday cycle, this move down was a Friday. Monday starts down low. We talked about this yesterday. Trap traders down at the bottom or the top of a week, at the beginning of the week, they got to sit there possibly for 3 days and maybe even be caught for a long time. But 1, 2, 3 back up, and then the move comes down again and they resume the trend down all the way to the end of the month before they lock it in with an engulfment. So end of the month, beginning of the month. The move started at the beginning of the month, came down, measured move. They lock it in. The market goes back up inside before reversing on an engulfment, coming right back down into the breakout trader. So again, your intraday bias may have been short. They've pulled off of that quite aggressively, revisited that initial breakout, and again, we can take any 50% level on a day itself, even on the intraday, and use that as an area of where the market may find support or resistance. And then that market resumed its move down, which gave us our M formation. I talked about this yesterday. I don't know, this market has lots of room on the downside. We scrunched it up. This is not a trade recommendation because this market could coil for a squeeze and an explosive move back up. We have an area, we'll just zoom in here a bit. If we draw and project this low across, again, we can see where that was an area that was significant on the way back up. So this level roughly in the area 13,750, somewhere in there, 14,000, sorry, could end up being some kind of level of support or resistance. If this market was to break, hard to say where it could go. But if it coils and squeezes, we could get an explosion back up towards the beginning or the high of the month. The first place would be the lower high that they made last week. So I look at the daily charts every single day for every pair that I'm going to trade, and I gain most of my trades are on gold and the Nasdaq. You can see this morning we've tapped the low of these pins, which was pretty much not quite the overall low of the month, but we're down low at the low of where January was. We have breakout traders in from Thursday. There's a gap there at 325 roughly. The market is currently trading at 14,060. Sorry, the low of that bar is 132. So we're roughly 65 pips away from that. It's a Monday. Chances are they could be pulling traders back inside. Maybe 1, 2, 3 as we saw. This is a 1 push, 2 pushes. We could still have a third push blowing off and down or coiling for a squeeze and giving us a W inside of the end of the month. But if this market was to come up 1, 2, 3 and roll over and break that low, hard to say what could happen. Hopefully you got value from today's video, traders. The longer time frames, beginning in the ends of months, micro trend lines, all these things, people have asked me why I don't use EMAs and just trend trade and everything else. That sounds good, but you could be in a strong trend. And if we just look at gold, for example, we've just seen them break the high of the month, the high of the week, the high of the day, all at the beginning of the Asian session, and that market then proceeded to drop 100 pips. So the later we get into this trend, we could be in the last stage as we get closer to the end of the month. Right now we got traders trapped at the high of the week. They've taken out Friday's high. We might have 3 days down and they might resume the uptrend. I don't know. I have to let them trade and show me their hand each session. I do know this. This was an excellent opportunity at the beginning of the Asian session, which on a Friday or a Monday you may often see high and low of the week trade opportunities. We have a high currently in place. They've put a low in place. Whether that low will hold, I don't know. But now I have a reference point for today's trading. They've already broken out. We've got breakout traders in the market. This may be a pullback into Friday's trade, and they may coil it sideways before resuming the trend as they did on Friday. Very similar situation. Or this market may pull up and put a lower high in place using the high of Thursday, which is still essentially holding intact. This is a false break at this point, but we do have breakout traders in the market, but we're currently inside, and I will be looking to trade at one of these extremes. If the market was to work in 3 pushes and roll over into the open or near the end of the Asian session, we could certainly be looking at targeting yesterday or Friday's low, because we have traders long. We know that on longer time frames, their stops will be at the low of the day. They've already hit the current low. Well, the current low of the day is down here, but they hit the swing low. So we know there are traders in profit from Friday's longs. We know there are traders in profit from the shorts at the high of the day. But on our daily chart, still strong bullish uptrend. We don't have a trend line break or a break of a low yet. This could still be setting up for today, and when this market is still in a long direction. So hopefully you got value from today's video, traders. So keep it simple. Step back, look at the longer time frames to develop your bigger thesis and bias. And then for the timing windows beginning in the ends of the month, these trades can offer you some massive moves if you're positioning yourself in where a move may be going for a week, 2 weeks, maybe even the full month. Have a great trading session. Keep it simple. Start the week off on a great note, and may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.